Hello and welcome everybody on today's call. My name is Claudia Eifert and it's great to have those sessions with the founder and CEO of Utopian Global, Bill Rowell, and the founder and CEO of Ryan Messer is coming in a second on board as well. So I welcome everybody from all around the world to this call. I know some of you did intentionally wake up very, very early. So it must be like 4 or 5 a.m. for you guys there in New Zealand, Australia. So it's fantastic to have you on the call. That's really, really good. And of course, many people from all other places, the US, a lot of people, Canada, great to have you guys here, Europe, fantastic. Some of you I don't know, have never seen your names. Maybe you would just type in the channel chat box there where you come from. And if it's the first time you are actually joining that call, that would be fantastic. Now today, it's going to be a little bit different because usually we do, of course, opportunity presentation, and I'm going to talk maybe a little bit later on it. But at the moment, this was really targeted for talking about what's going on in the world in Utopian Global, what's going on in the world of STORH, talk more about, of course, the STORH assets. So for you in the US, we don't certainly want to leave you out. So we're going to address also that a little bit here. But we want to mainly, of course, talk about STORH today. We're certainly going to address also some gold questions, which I do see here in the panel coming. There's always some gold question coming. In fact, it is the right time right now as well to talk about this. So you have the chance to put in your questions. We have already collected a lot of questions, so we're going to go through and see how far we actually going to go. Thanks, Robbie, for always leaving your message and saying good evening to Bill and Ryan. Bill is not yet on the call, but he is going to come on. Sorry, Ryan Messer is not yet on the call, but he's going to come in a second on the call. Hello, Bill. How are you in Dubai? How is lockdown? Are you able to go out? And I think it's going to be probably hot where you are.
Hi, Claudia. Great to be here, and welcome to everyone joining us. I'm in Dubai. It's fantastic. It's hot, which is great considering the world conditions. Businesses are starting to open up slowly here, but I mean, this is a global pandemic, so it's tough times for many people around the world. So it's great to be involved with a wealth creation company. Real assets, real income.
It certainly is. In fact, we were just talking about silver before and how silver is really having a great run.
Yes, it is. Well, I mean, silver's had a great run earlier in the year before the pandemic actually struck, and then it pulled back maybe 30%, and then it only recovered maybe about 5%. But in the last week, it's really pulled back, nearly back to where it was. It's probably only 5% off its high before all this started at the beginning of the year. So the gold-silver ratios are shrinking, which is a good sign. I mean, gold-silver, it's a safe haven. And good to see you, Ryan. Here's a man that believes in
see you.
Assets.
Yes, great. Hello, Ryan. Great to have you on the call. We're just starting, of course, the Q&A session. And as, of course, you know, and we spoke earlier today about that, a lot of people want to know updates. They want to know what's going on in the world of Utopian Global and in the world of STORH. How has the pandemic affected? They want to learn about the oil price. Why did it drop down? So there's lots of things people want to know and want to understand as well, because at the end of the day, we are also a wealth education company, and people really need to understand, you know, of course, money, but also what the projects we are involved in and how it can better their life, because at the end, this is what it is about. So, Ryan, welcome to the call. Where are you? You're in Atlanta?
I am. Yeah, I am here in my new office, which is not quite set up yet, or I give everyone the tour. But anyway, it's a work in progress.
It always is, isn't it? Yes. Good. How is the pandemic affecting you guys over there? You can go out, or you're still in lockdown like Bill in Dubai?
No, we're free, and we're allowed to run around. There's some places where, of course, you have to wear masks, but here and in Texas, I was just in Texas a week ago, and I made my way through New Mexico and Colorado, and then back across the U.S. Yeah, it was you know, everyone's trying to get back to normal. Restaurants are a bit thin, but it's busy. Cars are all back on the road. Everyone's wanting to get out. I think everyone's got a bit of cabin fever and
Yeah, I think
ready
so
to go
too.
on vacation.
That's, I think, I was wondering today as well on my bike ride, was so many cars. I mean, it's just like stuck everywhere. It's just so many cars on the road. So they all want to hit the road, go out, and if they cannot fly, they're gonna hit the road. All right, so let's get into a little bit of a discussion here. We have lots of questions coming on. Of course, one of the big questions here for you is with the STORH project. Obviously, we have launched the project back in 2018, the last month, where we really just soft launched or pre-launched STORH. Then we collected money, and obviously you purchased the first 2 assets. Those first 2 assets you sold again, and then we purchased the 3rd asset, which is the Raccoon Bend oil field. Oil prices dropped below even 40, which sort of is an unprecedented event. I know a lot of people are sick and tired of hearing that word, but I don't know any other English word in my English what I know. So what's the update on that? Maybe you want to educate a little bit the listeners what's really happened.
Yeah, so just to clarify, so we sold one of the first 2 assets. We still own one of the first assets that we bought, and of course we still have Raccoon Bend. That's an asset that we hope to hang on to for a very, very long time, as it will continue to perform. So yeah, what happened to oil prices a couple weeks back or a few weeks back? It really became a storage issue, and so I had so many people calling saying, "Oh, Ryan, I want to buy oil at $1. I want to buy oil at 50 cents. How can I execute a trade?" Well, you couldn't, because those contracts had already been bought, and essentially those were April contracts that were coming due, and there wasn't storage available. Those were physical contracts where if you purchased a contract and you wanted to you had to take delivery of it. And the issue became, you know, everyone started storing oil as the price of oil was going down. Number one, obviously because of demand, right? Almost no flights were running, or very, very few flights were running anywhere internationally or domestically around the world, which is unbelievable. And then of course, you know, travel. So right, everyone was on lockdown pretty much. And so that created significantly low demand, on top of the fact that I think whether it was either this epidemic or whether it was going to happen anyway, various consortiums within OPEC were trying to put pressure on the U.S. shale industry, which, as everyone knows, so there are a lot of very complex dynamics going on here, right? Because most of our production in the U.S., 99 point something % of it, is controlled by private company or private individual, right? Or nearly 100%. So the government can't come in, or hasn't come in a very long time, and said, you need to cut your production. This is how you're going to do it. So if you could imagine, tens of thousands of oil companies, all could just be some individual, it could be a large corporation, publicly traded, all having various types of oil production around the United States and elsewhere, and all the contracts tied to that, right? So whether they're moving their product on a pipeline and they have what we call take or pay agreements, or whether they're maybe they have a private contract with another individual where they have to produce a certain amount of oil, or they have, you know, to pay royalty. They can't just shut in production. And a lot of times, well, in a lot of cases, most of these companies would go broke because they would default on their existing private contracts. So as a result of all the complexity here in the United States, the government can't say that we need to reduce our production in the US like OPEC can. OPEC, because these are all, you know, national owned and run oil companies, they can say tomorrow we're going to cut production by 20%. Of course, it takes a little bit of time to cut that production, but that would be our plan, and that will help keep prices higher because there's too much supply in the market. And because of that, they all look at the United States and say, wait a minute, you've created all this glut in the market because you've been able to unlock the secrets of shale. And now we're producing so much oil that now you're oil independent, essentially. So we're net exporters of oil here in the United States because of what's going on in the Bakken Shale in North Dakota, what's going on in the Permian, which is West Texas and New Mexico, and of course the Eagle Ford Shale. So those are the three big shale plays that produce a lot of oil. And so as a result, guess who has to take the hit if they want to make an impact on the price of oil? All the OPEC nations, right? So the ones that can control their production. And so I could see that from a market perspective, and just taking out all the politics, why would they not want to put pressure on US oil companies? And so I think those two things crossed either ironically at the same time or kind of constructed at the same time as this COVID-19 epidemic unfolded. They took it as an opportunity to put a lot of pressure on oil companies here in the US, because these shale plays, unlike Raccoon Bend, which we can talk about in a minute, they only work above $45 a barrel, and some at 50, some at $55 a barrel. And there's so much money at risk too. I was just talking to Pete, the geologist on our project in Raccoon Bend, and he said at the end, actually the first quarter of 2020, the amount of debt that has accumulated in the shale plays is around $245 billion. $245 billion in debt Q1 of 2020 around the development of shale. So big business, huge business, but it is a gigantic treadmill. And so it attracts a lot of big banks because the rate of return. But, you know, last year, 2018, I say last year, the year before our last full year, 2018, it made money. It made, you know, $3 billion. But it's just unfortunate that it's the positive and negative. Sometimes we can outsmart ourselves with technology, like we did in natural gas, and now we're doing it again in oil a couple of times. And look what it's done to our industry, right? It's put a lot of pressure on it from a pricing perspective. But as we begin to go back to work, as we begin to fly, as we begin to drive, it's going to create more demand, obviously, for crude, and it is coming back. It's already made a $70 swing, if you can believe that. So we were at negative $40 a few weeks back, and now we're at roughly $32 a barrel. So does that affect us? Yes, it does, because we still have some unhedged production. So we get paid what the market is, but we also have hedges too for about half of our production. So we're still getting paid at $50 a barrel all the way through July. So I think the way things will unfold for us as an asset manager and for you guys as investors and stakeholders, we're going to come out well, because I think the price is slowly going to creep up here over the next 2 months, and it will allow us to put on some additional hedges to take out some of the exposure that we would have normally in August. But yeah, so that's kind of what happened to the oil industry in a nutshell from a high level. And anyway, but we're still in a great position from our perspective.
And Ryan, wanted to touch on the operational costs. You mentioned before that we've had this discussion. We've had this discussion many times over the years, actually, but in particular the last few months, given the conversion of COVID-19 virus, the world economy shutting down pretty much, or the oversupply of storage of oil versus the usage of it, demand. And of course, it went into negative prices because no one was buying the forward contracts. There was no one going to buy because they couldn't physically take the delivery, as you mentioned.
Right.
We're in a pretty good position because our production costs and part of the owners of our site are actually the operators of the site. So it's in their interest to operate this at maximum efficiency.
Yeah, absolutely. And that's just the one of those things that you kind of want to make sure you have in a project like this is guys who are helping you operate it that have skin in the game, because otherwise they're just going to look after, you know, themselves. But in this case, their production is their livelihood or part of it. And so they look after and pinch every penny, which is great. So going back to 2019, we'll kind of talk about operational costs. I mean, 2019, we had, I would say, relatively high operating costs because we were in development mode, right? So when you're in development mode, you've got a lot of resources on the ground, you've got pipelines being put in, you've got infrastructure, you've got drilling going on, development, and so that takes more resources. And so as a result, your operating costs are going to be a little bit higher. And they were around $20 to $23 a barrel, just sort of fluctuating in between those two numbers. Maybe sometimes $24 a barrel, that total lifting cost, that's all operations all in. But now, obviously, knowing that where the prices have been in the last 2 to 3 months, 3+ months, we haven't been drilling, we haven't been developing. So now we kind of go into, let's, put our head under a rock stage, right? And get everything from an operational perspective, very lean and efficient. And because we know it's going to be a few months before we start to drill and develop again, because of course we need the price of oil to be well into the $40 plus range. So right now we're probably running about $16 to $17 a barrel total lifting costs. And we would expect that, over time, if the price were to stay where it is, we could even cut a little bit more. But for now, I think there's a relative amount of optimism around the sector, knowing that, there's going to be some write-offs on what we call the resource plays, or those shale play type projects. And that's going to put more emphasis on the conventional stuff, which is what Raccoon Bend is, right? It's a conventional asset. It doesn't take a lot of technology to drill and develop it. It's very simple. The formations will produce without frac. And so it's easy to operate and inexpensive to develop. And it's these types of assets that people are going to come back to, because shale plays are going to be tough. And this scar tissue that was created from ripping off this $245 billion Band-Aid, which will unfold probably by the end of this year, because these write-offs aren't going to happen today, but a lot of that will probably be written off probably after the election, given that, it's a very right-leaning industry, or conservative-leaning industry. This is where the focus is going to be, and we're not going to have as much glut as we have had in the past. And so I think it's going to put more demand on oil, because again, there still is no real alternative yet to our consumption of oil today.
Great explanation, Ryan. Andy says here, and Sean says, music to my ears, time to take us to the moon. When moon?
When is the moon? Well, look, let's all get out, get out of our homes. Let's start spending money. Let's get, optimism back just in the general economic market. I think all this printing of money here in the US has kept our financial markets afloat, but, we need to see consumer spending. And I think that will be a big help. But from our perspective, we're ready to go. And our projects, what we've got under our belt hasn't changed. In fact, some ways, there's going to be more positive pressure to develop the projects that we have. And I'll talk about two of them. One of them, obviously, the one we kind of started with, which was around mineral recovery. Everyone has been watching silver and gold and how well it's been performing. I guess in general, it's picked up a little bit. It seems that mineral projects are getting a little bit more attention today than they were before, and so now we're evaluating and looking at a handful of things that may come sooner than probably we have let on in the last 6 to 9 months. So that kind of on the mineral side, obviously, because of the support of the price of those commodities. The second thing is, and we're not 100% sure how this is going to play out long term, but at least for the interim, everyone has seen the pictures floating around the internet showing what the pollution looked like before the lockdown and now after the lockdown, right? There's a pretty stark difference in a lot of ways. And so that may invigorate the recycling, renewables, anti-oil groups and sentiment to start doing some things around the environment, pushing these projects forward. Maybe municipalities will take more notice and allow us some more flexibility, tax advantages in certain things. around what we're doing on our plastics to fuel project. And so I think that's going to put some positive pressure in that way, because yeah, we do need to do something about our carbon footprint. Of course, it will take time. We want it to be able to stand on its own 2 feet. We want to be able to do it without subsidies, okay, from the government, although we will be happy to take them. But we want our projects to stand on their own 2 feet, which is why we only support assets that we know are productive and deliver positive cash flow today, not 10 years from now. We're only going to focus and spend money on things that are going to deliver. That's what the people on the call want, right? I mean, that's what we all want as investors. We're in it to make money, and we're in it to do, good for the environment at the same time. So that's why we built what we built.
Yeah, correct. I mean, that's what a lot of people have the interest in. And in fact, as you just mentioned, renewables and so on. I mean, even though we all, I mean, you are very conscious, like very, Bill as well, myself as well. So we are already very conscious human beings. But of course, it needs to be as well lucrative for the people, because otherwise, right? So
right.
Certainly one of those questions coming here. Actually, I think it was just answered. Bill had a question there on the fossil fuels and of course the drawbacks on pollution, environmental impact, where you see the markets in a few decades. So you just basically answered that question. Now there's also questions coming, of course, from Sean says, when are we buying a gold mine?
Well, I think Ryan touched on that.
Yeah.
There's projects coming across our table. We have already had projects across our table. That Ryan was in Ecuador last year with Philip Judge and Robin Slaughter looking at the Ecuador project. There's complexities of some of these projects regarding the legislation and also the royalties, the governments, and these types of things. So some of these things can be blockers and take long time to get resolved. So this is why we haven't moved on that particular project yet. But I can assure you, we're looking at different projects right now. I mean, gold and silver. We're talking about this at the beginning of the call. I know Ryan. I've known Ryan since 2003, 2004, and he's a real asset owning person. So he's a gold and silver person, and of course he owns assets in the mineral sector, or natural resource sector as well. So it's a natural occurrence for us to be able to. It's a natural occurrence for us to be able to go into that particular sector as well. But of course, it can also be high risk. It all depends on the jurisdiction. What part of the world are you going to be in? Security risks, all these types of things. I'm in Dubai here. I was speaking to a couple of business people here over the last weeks. We're bringing doré gold in from Uganda, and most of the gold, Uganda doesn't really have any gold. Most of it comes from the Congo through Uganda, from Uganda through to here to the Dubai refinery. They had 21 kilos of gold. Let's say it's a couple of $1 million, not a lot. But with that said, it never showed up. So, you've got to be so careful on the supply chain process. Ryan knows this very, very, very well. And we know here in Dubai, maybe 8 or 9 years ago, there was a $200 million scam where a big gold import came in, but it turned out they were just filled with tungsten steel and gold plated. So being involved with gold mines sounds very, very exciting. The jurisdiction and locations where they are, Africa, Latin America, Australia, South Africa, of course. It's complex, but we're looking at them. Projects come across our table. So yes, we'd certainly look at that. I think many people are speaking about where the world is heading, and gold has always been a traditional safe haven. And there's going to be pressure on the US dollar as well. And of course, the purchasing power of gold over long term is wealth preservation. So that's what we like to do. That's our mission, actually, in one sense. So we're looking, Ryan, aren't we?
We are, certainly. But, we have to be responsible as well in terms of how we, disseminate the capital that we've got to spend. So that's another big part of it too, is risk mitigation.
Really, really important, always. And this is why, some people, of course, they haven't listened to so many of the webinars, so they may even didn't understand it. But that is why, of course, you did what you did, and that was hedging at least 50% of the oil, because in case of. So it's always looking in mitigation, this risk, doing this risk management. And this is what, of course, most people probably who are not in the industry or not having the long experience in the industry like you have would have have done because they just don't know. So we are really glad and you know, thankful for that. Now, there's of course questions coming on the cash payouts, so on, of course, the revenues and so on. We of course did some announcements on that. How will they look like? Will they become in Ethereum? Will they come in Bitcoin? Will they come in euros? Will they come in US dollars? What do we have a plan towards that?
You want to speak to that, Bill, in terms of?
Yeah, we can both discuss it. Well, primarily, I'll give a summary on that. Primarily based on the board meeting of STORH, which I think was November 2019, correct,
19.
Ryan?
Yes.
It's in the announcements section there. The planning to pay out distributions was going to be Q3, I think at the end of July this year. So we're getting very close to that. As Ryan spoke about earlier in this particular presentation, we've been, you, when I say we, I mean you, all you STORH owners, have been earning revenues from STORH since the 1st of August, technically. Okay, but those revenues haven't gone into your wallet because they're going into the redevelopment of the mine, that which is advancing your particular asset. So don't think that you're not getting paid into your wallet, that you're not actually getting a benefit from that. That's not the case at all. It's actually going into the particular asset. And I know there was some drillings done last year, and there's going to be a hold at the moment for the ones on this year. But the payment will be certainly in Q3 this year, and it will primarily be, oil's priced in US dollars, so I believe we're probably going to be paying it out to you in US dollars, the most simplest way. And people, what they do with that then it's transparent. You know, paying out in Ethereum, we could do that. We could pay out in some other stable coin, but I think US dollars is the right way to go. It's your assets, your share in one sense. And I know, Ryan, you can touch on this. The big picture is we're probably going to convert it to a traditional share into the future anyway, in time as we move forward. So we'll keep it simple, keep it transparent, and pay out people in the most simplest way. And if you get US dollars in your hands, I'm sure you're going to be happy.
Yeah, I think that's probably the smartest thing for us to do. Every time you transfer it from this denomination to that, or even crypto, there's a lot of risk on the transfer side. And of course, you lose something every time you do that. So there's kind of no point in my mind, although somebody might want it in euros and somebody might want it in Bitcoin. And so I think there's functionality to do that out there. So, but we'll, because it's in US dollars, the revenues US dollars, and that's how the company will file all of its, you know, financial returns, et cetera. Then that's what we'll distribute in, certainly. But yeah, doing straight equity, I think, sorry, real quick, just one of the things, you know, we talked about, currently we're still issuing tokens, it's an equity token, as everyone knows. So it's just like a share in the company. So I think at some point we will probably make that transition. We just haven't talked about when that will happen. But everyone will, of course, will have to affirm if you want to convert from a token to a share. But that's just because it is a legal document and it is a, you know, legal equity in a company. So everyone will have to sort of affirm that. But yeah, in terms of what it is or what you get, it's absolutely the same thing in my mind. It's equity in the company, but it'll allow us to. It's a little bit more straightforward in terms of how taxes are handled. It kind of falls then out of the crypto segment, which is really quite complicated, as everyone understands.
Yes, it certainly is. I mean, you know, I love, of course, to listen to Max Kaiser, Bill does, I think, as well. So there's a lot of, I mean, there's a lot of things going on, of course, in the Bitcoin market and so on, and especially Bitcoin to gold, etc. So it's quite interesting. But yeah, so there's another question coming here from Sean. Oh no, there's actually now a few questions. I'm just seeing them now, so sorry for that. Okay, so the last one is from Paul. How soon would a new member see returns from STORH? Ideally, the payouts going to be set yearly payouts.
Is this the Paul I know, Paul?
No, you don't know. Paul.
Oh, I was going to say.
Paul Nolte is with us actually quite some time,
okay.
But you didn't met him, no. I know that.
Yeah. So was this in terms of the frequency of payouts that we were discussing?
Yeah, I would say so.
Is that the question?
Yeah, I would say so. How soon would a new member see returns from STORH, and if it are going to be a yearly payouts?
No, I don't see us doing yearly payouts. the way we had originally envisioned this is that we would do quarterly distributions, but then we talked about some way to even further break that down. Once we have the system completely built and we know that we can accurately manage, you know, the next upcoming distribution, is to break that down into more frequent payments, whether that's monthly or even more frequent. So we're still working on that, but yeah, our plan is to still keep with what we had announced from last November and to stick to that plan. But that is our goal, because we realize that the technology's out there. If we can distribute every quarter and we can do some really accurate forecasting and balancing up, then certainly we can do those payments a little more frequent. That I think people will enjoy.
Yeah, I would love weekly eventually. So this is my
Well,
dream.
I think weekly is certainly easy, and we actually even talked possibly at some point maybe doing daily. Not saying we're going to do daily yet, but that certainly we're going to examine that and see how difficult or easy that is to do.
And another question. Sorry.
Of course, what's happened in the last 6 weeks has sort of made that daily concept a little bit more challenging, given the price has gone from 50 down to minus in a very short time back up.
Right.
So obviously these things we have to balance out and allow for, but certainly weekly would be certainly possible, I think. Yeah.
Yeah, I think weekly is pretty easy. Yeah.
And another question coming here from Andy. Andy is actually really he totally loves your message since he has talked to you, Ryan. He's just he says you're the man for assets, so he's really happy with that.
Awesome.
And so he says, will we be able to reinvest the dividends immediately into more STORH tokens, or take the distribution in more STORH tokens? He's asking.
You'll have that flexibility. So you'll have that, the way that the team at Utopian Global has built the system, you're going to have that flexibility built back in to reinvest your distributions and grow it more exponentially versus just taking straight dividends. But some people might just want the dividends and the cash flow, and that's okay too.
And Arima from the Bahamas is asking, will there still be an opportunity to purchase tokens after July? And also, when does the token price rise?
Ooh, good question on the token price rise. Yeah. We still probably need a couple of months before I think the token price is going to rise again. We need to talk a bit internally on that. But yes, you still will be able to buy STORH after July. Now, will it be a token or will it be straight equity? We're talking legal terms now, but you will be able to buy STORH. And so either way, it's the same to us, but yes.
Fantastic. And there's another question coming from Michelle. Michelle, she's asking, what is the difference between token and share fund understand?
Okay. So yeah, we'll spend a couple minutes on this, because a lot of people, if they kind of weren't around in 2017 and the whole Ethereum smart contract token concept. So a lot of people came up with some really interesting ideas around 2017 and raised a bunch of money. We're talking billions of dollars around issuing tokens. But most of these weren't equity tokens, and that's what we'll talk about in a second. But let me talk about token, because people flipped around this term, but I think when the dust settled in sort of late 17, early 18, or maybe even a little bit later than that, people realized that the token, what was supposed to be a utility token, was a security token. And it was a perfect way for someone who wanted to scam you, or for someone who didn't want you to have really any way to come back to them, was to create this token concept. Just like if you were to go to an arcade, right? You go to a video game arcade, you take your euro or your US dollars, you put it in the machine, and now you've got a token. Well, that token is worthless anywhere else, right? But it's supposed to have value in that arcade. But you leave the arcade and try to go buy a soda down the street, and they won't accept it. But they'll accept your US dollars or your euros. So that was the concept of the token. They're basically detaching you from your investment. So now they've detached the investment from the investor. And so now you're held with these tokens that are absolutely worthless anywhere, and you own no equity in any company. So then what quickly happened is people realized, well, we need to do the right thing, and so we need to create an equity token. So what that does is it gives people the same neat concept of using the Ethereum blockchain as a distributed ledger technology, all the things that came with crypto that were interesting, but it also wrapped security laws around it and said now that token is just like a real share in the company, a traditional share. And so then we attached that terminology to the word token and called it equity token. And so we do that in our private placement memorandum, which is on the Utopian Global website as you sign up, and you have to sign before you buy because it outlines all the details of the offering. It's a legal binding document. And so for us, that's just like buying a traditional share in a traditional company, because for every token that we issue a share that cannot be bought or sold by anyone else, only you. If you sell your token, that transfer goes with it. And so that was sort of the what had transpired with the word token, which in hindsight really kind of gave the word token a bad name. And I think there's a lot less hype in the market around token offerings now today because so much money was absconded through the issuance of them in 2017, 2018. So does that cover it, you guys?
Yeah,
Anything
I
to
think
add
so.
there?
I think that was a good answer which you gave, clarity on it. I mean, there's still companies, of course, companies coming out with, of course, all those different tokens. I mean, not yet as we have seen in 2016, 17, 18, but there's still people jumping on them, and so I don't understand it. But hey, there's still a lot of education to be done in the market.
Yep.
I think the key thing for people, as Ryan pointed out, the key thing that we've actually done is through the private placement memorandum is that we haven't separated you from the asset. So it's very similar to a share in one sense. It's okay. So it's on the ERC-223 blockchain token that you own, the STORH custom token, but through the private placement memorandum, which is a legal document, it gives you legal binding over the assets that you've actually purchased. So you're actually an owner of shares or digital shares, which is called STORH, in a US company called Source Rock Energy Partners. You signed that, you've acknowledged that in the private placement memorandum. So that's a legal binding document, and of course that could be left to future generations as well. It's a real asset, it's a real equity ownership. And when we transition from the STORH to a traditional share, it's a bit of semantics in one sense, but a lot more people understand traditional shares and what they do, probably ERC-223 tokens. So in a sense of in the future of listing on an exchange, I think the public exchange that people are used to is probably going to be more favorable to us in the future than what we would look at crypto exchanges. So the world's in very interesting times right now. So we're just observing that, but we want to make sure we always have our foundation, our base nice and solid and firm, that if we need to make a decision, we can do so in the right way and the legal way.
And there's a lot of discussions also, Bill and Ryan, on it. So, you know, when we last were back before COVID, when was it? Early March, wasn't it? When we were together with the lawyer who does, of course, especially consult regarding tokens, etc., which is, of course, on the board, on your board, on the STORH board. So, you know, he has a very exciting outlook in terms of crypto, in terms of on the technology, on the blockchain, but of course also said that it's still not educated enough, so there still needs to things happening, but he was of course very optimistic on that. And we just get a question actually from Sean there coming, and that is, if we're moving on to a CBDC money by central banks, will we have to change again in the future to the same DLT tech that we will use for CBDC?
So I recognize some of these acronyms.
Yeah, so basically the question is so onto this, the CBDC is, I think that's the exchange by central banks. Will we? So it's Sean is talking about the central bank digital currency is the CBDC, where it's this.
Oh, I see.
You know.
Well, I'm not sure what the actual question was, but I think it's the good thing about what we've got, because it is real equity, is if there's liquidity in the crypto markets, that we can always convert and do a crypto offering, right, on multiple crypto exchanges. So that's a good thing about what we've got. Whether we're issuing a token or real equity, it's irrelevant, because I think what we've learned over the last couple of years is, regardless whether we're going to list on a traditional market or a crypto exchange, we would have to go onto a different platform anyway, to where the issuer is the only issuer. And because a lot of these exchanges won't allow us from a security law perspective to be the issuer of our own token, because of, there's a lot of liability in that, corporate governance type reasoning. So even so, I think we would have to get rid of our existing 223 token, meaning we would just convert people over to the new cryptocurrency or the new smart contract. So, our options are still wide open. We still have all the flexibility in the world, because we are real equity. We do have real assets and a real balance sheet and income statement. So we can take this to a traditional exchange, which is probably where it'll end up anyway, given that the crypto market is, to me, it's going sideways. You're losing a lot of ground in certain areas, but certain parts of the sector are growing and are expanding and are gaining new markets, which is great. Because all the hype will come out of it, and will become, based on real performance, not just, hype and what some of these things say they will achieve. So I think that's probably the good thing to take away, is we still have all the flexibility in what we built here today, regardless of we're a token or equity or whatever. So.
Thank you. Another question coming up from Bill in the UK regarding the ocean cleanup. Any announcement, further development with that on this area?
No, but I did just kind of release our podcast that we recorded a few weeks back, and so I just put it up on Telegram. If you're not on Telegram, jump on on our Telegram feed. Just released that audio, and so we'll probably reconvene here. It's just been really tough through this lockdown. Everyone's just sort of managing their own environment and their family issues, etc. So things are starting to speed up as they open up now, and no doubt we'll be doing something with them soon and some more collaboration. But yeah, it's still there, and I think we have a good partnership with these guys. They're really, really sharp, and they're well connected, and I think we can help each other out, which is the whole point of the JV.
Great. Now a few more questions coming, of course, now in. What is For Ocean is another great ocean cleaning up. Yeah, and Angie say that. But Shazad, which we met, remember brother Shazad?
Sure.
He is, and actually I was talking to Sahir the other day. He was on a call in the morning, and he gives his regards. And he had, I don't know, I think 9 heart attacks. So it's unbelievable bad, his health, but he is on it. He loves it, and he is passionate sharing it. So, but Shazad, which you met, of course, he came flew out to Houston. He says, "Hi, Bill, Claudia, and Ryan. Hope you're well and staying safe. Please clarify, you said distributions to members will be in USD, but the UG side is in euro. Do you mean the equivalent will be sent in euro?"
Yeah, primarily the oil is priced in US dollars. What we'll probably do, what I think we'll do is that the most efficient way of doing it, in fairness to people, is that we'll probably have another e-wallet added to everyone's account, and US dollars could be credited to that. Now, from there, you can withdraw to a Bitcoin account. From there, you could withdraw to, let's say, your British account, your British pound account, whatever the exchange rate it is. But if we take everyone's earnings and convert it from the US dollar to the euro, which we could do, maybe we still have to do that, and then from there, you then convert it from the euro to British pound. There's always a bit of slippage, and it's normally in the favor of the banks, not you. So we want to minimize the number of times we exchange it. And also for reporting purposes, I suppose it's just easier to, oil's priced in US dollars, and the returns and things. We're not 100% there exactly which way it would be done, but I think we've discussed before, Ryan, probably keeping it very simple and transparent. US dollar is probably the best way. But we could certainly do that. You'd have an option in your back office you'd have a euro account for your commissions and things like that. You'd also have a US dollar e-wallet account as well.
And it
plus
was
plus your gold account, plus your silver account. So there you go.
I mean, that's actually really amazing, because when you just think about the flexibility you have, we were just talking about the liquidity in gold. I mean, we are so liquid because you can just sell it back easily. But let's go back to Shazad. It was actually the other Shazad. So I always get these two wrong. I always do. So it's the other Shaz, which you also met at the Shahir house. So, but anyhow, there's more questions coming in from the birthday boy. Dan, happy birthday. Will we be able to purchase PM directly with our payouts?
You can do that now. If you're talking about STORH, hi Daniel, happy birthday to you. If you're speaking about whatever money goes to your e-wallet, it is your e-wallet, of course, and from there you can actually have it paid out to your nominated account. We'll be able to buy precious metal. Will we be able to use US dollars to buy precious metal? That will require more engineering, but that's something that we could certainly do. We want to give people flexibility in the member account. Primarily, we always were US dollars, but because of international transaction challenges over the past years of with laws changing around the world with international banking, we moved to the euro. We just had less hassles with it, but you know, I've got a feeling we may end up even eventually switching back in some regions of the world back to the US dollar, which would be very suitable for, you know, certainly the African nations, certainly Bahamas, certainly for the US regions, and Canada, of course, North America. So these types of areas we may actually switch. We just don't know yet. We're just considering this, but it's just the reason we went to euro was primarily just the international cross-border banking issue that we always experienced, which had been resolved. But the world's constantly changing in this area.
Yeah, and we got a lot of questions, of course, about that. A lot of Americans, of course, who are joining us, they just, it's hard. They have a hard time to understand, of course, the euro. Even, I mean, even people from Argentina or Brazil, or they just it's the US dollars, of course, which they know, and they just have a hard time with the euro. But there's another question coming here. This is regarding, of course, in the progress on the exchanges. Obviously everything has slowed down, so COVID certainly did play a role for everybody. I mean, any industry, really. So how's the forecast on launching on an exchange? Any updates? Any news?
Well, I think, go ahead, Ryan.
No, I was going to say, I mean, I think everything's kind of been pushed back a little bit, and I think the capital markets need to tell us a lot here over the next 6 to 9 months. So, and you know, I don't think it'll take some time for us to do some development on our side, let oil come back, let us execute a bit more on what we wanted to achieve with our original goals and objectives. So I think we need more assets under our belt, be a little bit bigger of a company than where we are today. I think we've grown quite a bit. I'm really happy with the growth and what we've been able to achieve. Unfortunately, this has been a little bit of a setback, but yeah, so I don't have a 100% clear answer yet, but I think the next 6 to 9 months will be very telling in terms of, you know, what that plan looks like.
Yeah, because
that's still part of the plan.
We still don't know if COVID comes back. There's lots of talks about that. We still don't know, you know, everything which is right now. I mean, how can it be the markets are up when there's no production? The world was shut down just. And so there's lots of things which really has to be told. I mean, I'm following quite a lot of people in the know-how as well. In terms of that, it's like artificially, of course, because of money printing, it's still going on when it should be totally down the market. So.
Yeah.
I personally don't think the listing is the most important thing anyway. I know a lot of people think, oh, when are we going to list? It's the most important thing. Historically, I've seen many companies list at the wrong time, and they've sabotaged all their work and the pricing on the particular share, or even on a token in one sense. So for me, as a longer term investor, I see, number one, that you're owning a real asset. Number two, that it's generating a return. Number three, that's with the right team. So, you know, and as Ryan said, we need to actually keep adding value to this particular company in asset value before we did list. And where the world is right now, it's very sensitive in global markets and quite artificially, probably even with prices where they are right now. So I'd be very cautious. I don't see it happening. Definitely, I do not see it happening in 2020 now. That's I think that options are, you could probably be safe to say that, correct, Ryan? But I think we focus on keep managing our assets, Raccoon Bend. We keep managing that with a great team there. We aim to pay out the distributions in Q3, as we said back in November last year, and I think that's great. I think they're the best things that we can do, and keep evaluating, of course, our projects with Polystream and future possible mineral divisions as well. I think these are the areas that we need to focus on right now. When the timing's right to list, I wouldn't be listing things right now in the markets. It's too sensitive.
Yeah, it's too tough right now.
And one more question, and then we are off. So first of all, Robbie is just saying here, commenting, get the dividends payout in gold bars. Well, you know, that would be nice. Shes is asking one of his members or potential new member. He's talking about regarding pyrolysis, recycling. Throughout the plastic to fuel process, are there any byproducts released that could have a negative effect of the environment? The member is concerned that while solving the global plastic crisis, another crisis isn't taking its place.
You know, the great thing about pyrolysis, and I think it's a truly undervalued technology, and the reason why is because there's still no real solution for 80 to 90% of what ends up in the landfills. And if done correctly, and a lot of equipment, you know, it can be built relatively cheap, right? You could probably build a unit for $1 million, $2 million, but a lot of these systems don't recycle the syngas. And the syngas is what's released that doesn't condense back into a liquid that is then further distilled. So if you can imagine, you're heating up all this plastic in a vessel and all the gases are moving up into the cylinder, and some of that condenses in the condenser, and then some of that gas you can't convert. So what happens if the system is built properly, you can recycle 100% of that back and burn it again to use it as the fuel source. So there are multiple gases that you can use for syngas. So when you start the machine up, you start it off with, you know, some sort of starter fuel. And then once the machine is running and actually breaking down the plastic and creating this gas, it's recycled and burned again. So it truly is, if built and engineered properly, like the system that we've got designed and are ready to deploy, it can be 100% efficient in terms of its usage and emissions. So that's the great thing about pyrolysis. And I think ultimately, you know, the governments and in municipalities will have to get on board with this, because the alternative yet is just throwing the stuff into a landfill, because you can't mechanically recycle all this plastic. They're even finding out that now there are companies that are working on enzymes that will break down plastic back into other forms, but that's only the types of plastic that can also be broken down mechanically. So that's PET. Right? Those are plastic bottles that we usually drink water and soda out of. But all the other plastic yet cannot be broken down by enzyme, and either has to be broken down over whatever hundreds of years sitting in a landfill, or through pyrolysis, where you can actually create fuels to then compete with the traditional, you know, oil and gas sector, which is what we'd be doing. Remember, for every barrel that we create from plastic is a barrel that doesn't have to come out of the ground in a traditional way. So I think it's a beautiful solution.
Actually,
and if done properly, can be efficient.
And Sean was just asking to that, what kind of plastic can we use?
We can use it. We can take up to probably 2% PET, which is type 1, and we can take some PVC. PVC is problematic because it creates chlorine gas, and of course that's really nasty, and you have to have a whole nother setup to manage that. But we can take probably 1 or 2% of type 1 PET and PVC, and then all the other plastics can be recycled. So 2 through 7 or whatever it is can all be recycled this way, including tires, including polystyrene, you name it, can all go through the pyrolysis system.
And there's another question just to that, the manual handling of plastic from Sean, cleaning for polystream, do you foresee regulation getting tight, and can that increase the cost?
Sorry, do I see regulation doing what now?
So the manual handling of plastics, cleaning for
Yes.
polystream, do you foresee regulation getting tight, and can that increase cost?
I see it getting tight in certain jurisdictions. I think that's where you have to you have to really be, I think you need the government support in what you're doing. I don't really see regulation getting tight on the handling of plastic because, again, all we're doing is just we're mechanically breaking it down. So, right, we're putting it through shredders, so it's all the same format and size. And most of this stuff doesn't really have to be cleaned all that well because it's going through pyrolysis. So all the organic material can be broken down. It's mostly just so that we don't have water in the system. So you have to dehydrate it. That's the big issue. But the handling is the biggest expense really going into it that can fluctuate. So labor costs, right? So labor costs are the biggest. Obviously, the price of the fuel coming out the other end, you might want to make sure that we're in a market environment that can easily support it. And then, of course, regulation too, right? So in the US, we're probably one of the more highly regulated. And so that's what I see when I talk to pyrolysis companies that are converting plastics to fuels today, that the process to getting all your EPA certifications is a really tough task. And I met with, in fact, one of the only ones that says they've got all their EPA clearances, because it's a legal process, because there's no set rules for this. Like, hey, you want to convert plastics to fuels, here's what you have to do. So every hurdle you jump over, there's 3 more. And so, especially in the US, but in other areas of the world, I think this can have a greater impact, be more cost efficient, be more profitable, and probably have more environmental impact because of what ends up happening to the plastic in those regions. So.
And Anthony's asking too that is really the last question. Can plastic in the ocean be recycled like landfill plastics?
Yes, it can. And so what happens to all the plastic when it comes off of these vessels? It gets landfilled because there's no solution in most places like pyrolysis. But that was kind of our purpose behind setting up this JV with Oceans Cleaners, is to understand how they see the logistics process, because that's the last thing we want to see is let's go clean the oceans up, but yeah, let's just go dump it on land and worry about, just bury it, and then the problem's gone, right? The oceans, we all see it because it washes up on shore, and so what was supposed to be a beautiful vacation and a walk on the beach now just looks like you're walking on trash. Well, no, let's just take that off of the beach and let's just go landfill it, cover it with dirt, and we'll all forget that it ever existed. That's not the way to look at things. So we need to look at things in terms of how we completely solve the whole circular economy. And so if we work with ocean cleaning companies to understand their logistics, maybe we can design systems and infrastructure to match and tie with that, so we can be a part of the solution with them. So that's why we've done this JV with Ocean Cleaners, is to help the whole ecosystem function more properly and efficient. So anyway, yes, it can be recycled. Short
Fantastic.
answer.
Well, great call, guys. Thank you so much. Last words from Bill on gold and silver outlook from quite a few questions we got.
Okay, well, the outlook is bullish. I mean, it could be quite volatile though, because there's quite a bit of the liquidity is quite tight right now. So even though gold's back above its high before the COVID-19, and silver's getting very close back, it's only a few percentage points off its high before COVID-19 kicked in, because there was a significant pullback. Gold silver outlook is strong, but with that said, there could be some volatility. It might pull back before then again starts to break out on the upside. So, I mean, I don't look at gold and silver as a speculative buy. I buy gold and silver for a long-term hold, because I know over the next 2 or 3 years it's going to preserve my purchasing power, and it's a long-term, and I'm going to do well out of it when it comes to the pricing. I think we'll certainly take out what the experts say is gold's certainly going to be, possibly take out the previous high of $1,920, which was back in 2011. And the gold-silver ratio, or the silver-gold ratio, is now contracting. It was 113 ounces of silver to about 1 ounce of gold. Now it's dropped just below, I think, 100 ounces of silver now. So there's some shifts happening now. But that doesn't mean it's not going to pull back before again it resumes its its trend. It's volatile. So again, understand what you're buying there. It's an insurance policy. It's long-term wealth preservation. It's highly liquid. You can convert back to cash, as Claudia said earlier on in the call. So I believe gold and silver, if you've got lots of paper wealth sitting out there, put it into real assets. Put it into store, put it into a bit of gold and silver.
That's it. That's exactly what we're going to close on. You see, you heard Ryan, he's pretty transparent. You heard Bill. You know, we own real assets. Through STORH, we own real assets. Gold and silver is real assets. And now, of course, we have to share the message. That's our job. That's my job, and the people's job to get people to, of course, come on board with STORH and gold and silver. So thank you, guys. It was a great talk, great session today. Again, disclaimer at the end. I'm not a financial advisor, so we're not financial advisors. You have to mitigate your own risk and what you want to do there. Thank you, Ryan. Thank you, Bill.
Thanks for having me on. Great to see you.
Yeah.
Thanks, Ryan. Thanks, Claudia. Thanks, everyone.
Good.
Thanks,
Thank
everybody.
you.
Stay safe. Stay well. Thank you.
Stay safe. See you. Thank you, everybody.